like to introduce our first speaker, who's a preeminent economist in this country, a man of many parts in public and private enterprise. I'm pleased to introduce to you Dr. Peter Bacon.
It's not the levels, it's not the level of debt, it's about the speed of change.
Due to what has happened in the Irish market over the last couple of years, we have now become one of the most transparent property markets in the world. We're now ranked number 7 in the world by our Transparency Index. We're now below the 10-year average prime rent for Dublin shopping centres.
But overall, we've got approximately 1,100 insolvencies in the 9 months. We predict somewhere north of 1,500 plus. If you add in the personal asset receiverships, we're certainly heading up to 1,900 for the year.
The other trend that has arrived in the market as well is just the arrival of UK and US restructuring advisors. That's something that is here to stay, certainly for the next 5 years.
This crisis started as a credit crisis, financial institution credit crisis, and it's difficult looking back to sort of over-dramatise how extraordinary these events were. On the country issues, clearly everyone's aware of the Greece, Portugal, Spain issues, and they will continue to proliferate 2011. I guess the question is who's next? So how will junior debt evolve as a class?
More tightening, higher taxes, lower spending within the same base doesn't resolve the structural problem of the Irish public finances. The key question are what is going to happen to the risk premiums on foot of the exchequer cost of bank bailouts.
Now what's happened is the FDIC has wiped out $7 billion because America is just huge in terms of the banking market. You've got 829 banks there that are now rated 4 to 5, which basically means they're in the severest risk category.
I think rough estimates that are somewhere between 4.5 to 5 billion worth of debt was issued from Ireland from the US private placement market between 2005 to date. Of that, some of that is going to be maturing over the next couple of years. And a key thing to be aware of is within a restructuring situation where distress has hit the company, this market can become pretty fluid.
Most examiners would actually welcome very orderly and strict direction from a judge to say, look, we want this, come back to me in 2 or 3 weeks with your ideas. Effectively, he's nearly saying, come back to me with the bones of a scheme within 2 or 3 weeks.
In scale, as a percentage of GDP, the problem is clearly very, very significant. But generically, the issues are the same kinds of issues that confronted government in the UK and confronted governments across Europe.
100 borrowers have 50 billion of debt. Those 100 borrowers, NAMA will be effectively their new bank. Otherwise, there are 1,400 borrowers with 31 billion of debt. There are serious issues in that 31 billion, and that hasn't even been addressed yet.